everyone, welcome to this special series, COVID-19, the new normal. Joining me today is Mr. DP Singh, who's the Executive Director at SBI Mutual Fund, India's leading mutual fund house. Thank you very much, Mr. Singh, for joining me in these difficult times. My first question to you, sir, a lot is going to change when it comes to investor behavior, when it comes to investing, as we grapple with COVID-19 and perhaps even in the months and years to come, things are not going to be the same. My first question to you, we are in a low interest rate regime. Interest rates might even go down further is the expectation. The stock markets are not doing too great at all. Are smart saving solutions through mutual funds therefore going to be the new normal, according to you?
Yeah. See, today, as you rightly said, Mr. Vivek, that the smart savings are going to be new normal. My firm view is that it's a rebooting kind of period for all of us. Clock has stopped for all of us, and what we are looking at it is once we come out of it, it will be absolutely a new normal, the new way of working, new business models. Everything will change. And the savers will look for the smart saving solutions because though it will be a low inflation era, but at the same time, the real return will be very, very less. If you look at the announcements which have happened in the recent past, in the largest bank, State Bank of India, they have reduced the saving bank interest rate to 2.75%. And today, as RBI governor has announced that reverse repo rates have been still brought down by 25 basis points. So it can go, the savings bank rates can go further down. In such a scenario, to have a real return, the investors, the savers will definitely scout for some better options where we can have at least some real return and they can conserve the money also. And I personally feel that the mutual funds fit in very, very well and for that smart saving solutions. That's absolutely right.
So what, according to you, could be schemes in which investors can consider to be able to get some real return with not that much of risk, which equity today brings with it, given the sharp fall?
Yeah, actually, I say mutual funds are offering very low cost, very tax efficient products to start with the liquid fund or with a money market fund. See, even today, if you look at it, if I compare it with the State Bank of India's saving bank interest rate, so even a liquid fund will give 150 to 200 basis point more than that. Generally, the YTMs of liquid funds are somewhere between 4.5% to 5%. It may go down for a little lower to 4.25 to 4.5%, but still there's a possibility of having 150 basis point more than the same interest rate with almost the same kind of safety and liquidity. The only difference between the liquidity is that you can't take the money back across the table, but you can take it at T+1. You want the money tomorrow, you can give the redemption today. You can put in your redemption request digitally, and next day morning the money will be in your account. And that's something which we have to take it to a next level. It should be a liquid fund, a money market fund should be the portfolio of each and every saver of the country. That is something which we are looking at, and there's a huge, huge potential.
What about arbitrage funds? Do you see those as emerging?
Is a step further. I'm saying step by step. The first one is liquid fund, and this thing. The arbitrage fund is definitely another option, very, very tax efficient option, because we don't carry any market risk in that. Everything is settled on the every millisecond basis. Mutual fund don't carry generally any open position into that. And in such a scenario, the carry is generally around the 50 basis point more than the carry rate. That is the general phenomena. And today the policy rate is say around 4%. So the returns on that easily can be expected to 4.5% kind of thing. And 4.5%, no TDS, no a lower tax rate, even the short-term capital gain at 15% only. And especially if you mix it with, if you're putting it for 2 to 3 years and you mix it with a systematic withdrawal plan, if you want a cash flow every month, So then it becomes a very, very tax efficient. And the first timers, the liquid fund, the money market fund, the arbitrage funds, that becomes a bucket for the first timer, anybody, and it becomes a smart saving solution.
It's been a pleasure talking to you, Mr. Singh. Thank you very much for joining us and wish you all the best. We live in difficult times and congratulations that your fund house has become #1. But these are very, very difficult times and I wish you all the very best.
Thank you very much. Stay safe, stay at home. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.